Gold has been heavily recommended as a potential hedge against economic downturn throughout history, and a good way to diversify an investment portfolio. And in this video, I'm going to show you how to invest in gold in the UK. But when people say that they want to invest into gold, what do they actually mean by that? You see, there are multiple ways that you can theoretically invest in gold, and they're all very different. Firstly, you can invest into gold ETFs or ETCs, exchange traded commodities, which is basically a bet on the spot price of gold increasing. You think the price of gold will go up over time, and you only want to try and capitalize on that increase in price. Secondly, you can buy physical gold, which is very similar to the first option, except you actually own the gold yourself, and you store it away in the hopes that it increases in value or that it can be used as currency if robots do eventually take over. Finally, you can invest into companies that mine for gold itself. So, as a UK investor, how can you invest in gold using each of these three options? And which option is best? The first method we'll look at is investing into gold ETFs or ETCs. And for now, we'll just focus on ETCs so I don't keep having to say both. You can find ETCs on a variety of online brokers, and you can invest into them at the click of a button in most cases. It's like buying a stock in a business, but instead of a stock, you're buying gold. But what are you investing into if you buy a gold ETC? An ETC is an investment fund managed by an investment manager. The fund physically holds gold bullion, bars and coins, and issues shares that closely track its spot price, and you're just buying those shares. So with this method, you're essentially making an educated gamble on the price of gold increasing over time, just like you would with any stock in a company. But you don't have to physically buy the gold yourself or worry about storing it. Over the last 100 years, gold has had an annual return of around 5%. And over the last 20 years, its annual return has been higher, closer to 10% per year. But always remember that past performance is not a reliable indicator of future results, and none of this video is financial advice. When buying shares of a gold ETC, you will have to pay an annual management fee, which is usually between 0.1 and 0.4%. And if you're looking to invest into gold ETCs for yourself, it really couldn't be easier. You can use an app like Trading 212, I'll link to them in the description below, and just type gold into their search bar. We'll use iShares physical gold ETC for the purpose of this video, but do be aware that this is not a recommendation and we are not financial advisors. We're simply using this ETC as an example. If you're ready to invest, just tap buy and select the amount of shares that you'd like to buy or the value of your investment and hit review order. And that's it, you've now invested into a physical gold ETC. Now let's look at how to buy real gold. So how do you get your hands on some of this bougie goodness? Well, it's pretty simple. You buy gold bullion or coins from a vendor. In the UK, the Royal Mint produce Sovereign and Britannia coins, which you can buy through a variety of online sellers, such as Bullion by Post, physicalgold.com and Baird & Co. Please do note that we've not actually tested these vendors ourselves, they're just example retailers we found from a quick Google search. When you buy these coins, you won't pay any VAT and you won't incur any capital gains tax on profits you make from selling them because they're technically legal currency, which is definitely a plus for the physical gold route. Where the physical gold suffers though is from the fact that it is physical. So not only do you need to think about how and where you're going to store it, but you also can't just sell it at the click of a button like an ETF. There's a much longer process involved. So if you needed your cash out quickly, this option could be problematic. That being said though, unlike an ETF, you actually have full control of your asset, and there are no management fees, so you can take full accountability of your investment. And it also might be worth more if the global currency fails and the world burns around us. Buying physical gold is actually really easy as well if you know where to look. Just find a retailer like one of the ones we mentioned earlier, and then on their website you'll see an array of different Sovereign and Britannia coins, with the option to buy gold and silver bars as well if that's something that interests you. Once you find something you like, click on the buy option and you'll be able to browse all of the prices and varieties available. The riskiest option in this list is investing into companies that actually mine for the gold itself. Again, you can do this through a variety of online brokers that will allow you to invest into these companies at the click of a button. But do note that investing in these companies is typically much more volatile. This is because you're investing into a company, not just the asset of gold itself. So any internal issues that could occur will affect the value of your investment. While there's a chance the value might increase faster than gold's spot price, things like production costs can play a part in its value, which is something completely out of your control. And if any bad decisions are made by an incompetent manager, your investment could suffer, even if the price of gold hasn't changed at all. This all results in the price fluctuating a lot more than the other options in the short term. Similar to the physical gold ETCs, if you wanted to invest into companies that mine gold, you can click onto the search bar in an app like Trading212 and type in gold mining. We'll use the AUAG ESG gold mining as our example here, but again, this is not a recommendation, just showing you how to invest for yourself. The process from this point on is exactly the same as the ETCs, so if you're happy, click buy, then select the amount of shares you'd like to buy or the value of your investment and hit review order. When buying gold, you could be susceptible to tax if you don't invest in the smartest way. As we've already said, any money gained from UK sovereign coins is exempt from capital gains tax altogether, so if that's the route you want to take when buying gold, you won't need to worry about this. However, if you're buying individual gold mining stocks or gold ETFs, if you make over £3,000 in returns, you will be required to pay capital gains tax, unless you invest within a stocks and shares ISA, a SIP, or a different tax efficient account. So use a tax efficient account if you're not already. It's actually stupid not to, there's almost no reason that you shouldn't be doing this. With all three of those options covered, it's also important to ask whether gold is even a good investment at all. According to a study called the Golden Dilemma, gold may not be an effective hedge against inflation in the short to medium term, which it is largely considered to be. Only over the extreme long term is it a potentially good way to protect your money from losing its value to inflation. And even then, the study suggests that it's a poor safe haven to store your money in case of economic crisis. This is not to say that gold isn't a good investment, after all, it's seen a substantial rise in annual returns within the last 20 years, but more that it might not achieve the results that a lot of people think it will, as in being a hedge against potential crisis or inflation. But that's a conversation for another day. If you're new to the investing world and need help with confusing investing jargon, you can gain access to our free cheat sheet which I've linked in the description below. And if you want to learn how to invest into your first ETF like the S&P 500, you can watch the guide that I've put on screen now. It's a Trading 212 guide, so should help if you were looking to use them for your gold investments as well.